what is it, and have you ever found yourself having to answer questions about greenwashing?
Yeah, well, I think we're all constantly and increasingly sort of focused on and aware of the issues around, let's call it transparency and sort of accurate and honest disclosures to our customers and to the kind of outside world. So, we M&G consider that to be absolutely part of our responsibility as a fund manager, as a steward of our customers' assets. And so we are absolutely focused on greenwashing, and on the other side, transparency and honest communications with our clients. We at M&G haven't been, as far as I'm aware, sort of flagged for sort of concerning or misrepresentation or concerning communications to our clients around sustainability. I think we've always been quite cautious about how we communicate our approach to sustainability and the sustainability of our funds. And so I think my understanding is that we haven't been flagged for that particular issue. I would say that, yeah, it's absolutely important to us. I mean, I suppose the one area where kind of all fund managers are sort of where the scrutiny is on us is we're setting sort of quite ambitious, often net zero or decarbonisation commitments and ambitions. And it's great to set your ambition out, but you have to demonstrate how you're going to deliver on it. And through GFANs or through the Net Zero Asset Manager initiative, there are, we're very much part of a group of fund managers and investors who are setting these commitments, and they're now needing to demonstrate how we deliver on those commitments. I mean, one example where I think we've been a bit cautious is, and by the way, we always get kind of ranked and scored, I would say, very well on things like UNPRI or when Share Action does their research and analysis. I think we kind of always perform well and sort of in the sort of upper tiers on those sort of things. So I think our performance and what we do is good, and is, I would say, in the leading pack of global investors, I would say. But one of the things when we set our Net Zero Asset Manager kind of commitments before COP26, we actually probably focused on a smaller amount of our assets than some of our peers did, in the recognition that it's actually quite hard to identify a lot of your private asset kind of decarbonisation progress, because we haven't necessarily got the data from the underlying companies. So we set our sort of our GFANs commitment at a slightly smaller, not less ambitious, but a smaller number of our assets than some of our peers. Some of our peers said all of our assets. And we said, look, we haven't got the analysis for that yet. We're trying to build that over the years to come. So, and then that gave us, I think, a fairly conservative starting point from which to build and from which to progress.
Because one of the problems is this thing that there's the expectation and now requirement for reporting before companies are even collecting the data. So it's that mad thing of you're expected as an asset manager to say what you're doing about something that no one's actually able, and that sort of exemplifies it, doesn't it? And it wasn't a suggestion that you'd been accused, but have you been in a situation that M&G haven't been pulled up in front of the beak for having done something in the greenwashing area? It's just, I wondered if you'd ever had a client asking you, writing and saying, why are you holding this company that looks like greenwashing? It was more that sort of thing.
So I'd say two quick things. One is that our clients, particularly maybe our institutional clients in Europe, for example, but actually across regions and across client types, so very much our direct and advised clients as well as our institutional clients, more and more keen and interested in understanding how we are managing their portfolios with a responsible and sustainable mindset. So they are inquiring definitely about why we hold this company in a ESG or sustainable and sometimes impact fund. They might say, we recognise the sustainability and the positive impact of your portfolio, but this particular company, we've heard some news about them which is problematic and challenging. What what is your view on it? What are you doing through your engagement with that company to ameliorate the situation? So yeah, there's definitely more and more scrutiny on us. I don't think there's any more just an assumption that you have ESG or sustainable or impact as a badge on the fund and then nothing more needs to be done. Clients are increasingly wanting to scrutinise what we're doing themselves. And I think that's a great push and pressure on us to make sure we're delivering funds which can generate positive financial returns, but also positive social and environmental kind of sustainability and outcomes. One of the things that we really believe is important. So I manage our impact strategy and co-run to some of our equity impact portfolios. One of the things we've always held as a really important protection against greenwashing and a real push towards transparency is full disclosure of all our holdings. So every year we produce an impact report where we have every single one of our holdings, not just listed, but with a flag on what metric we measure them against to illustrate the positive impact they're generating. And then we measure that metric on an annual basis and are fully transparent about it. So if a company is, if it's in the fund and we're hoping for it to generate a positive impact and it doesn't deliver that in a given year for any reason, we are transparent about that. We'll also flag in that report, in our annual impact report, areas that we found problematic or difficult or challenging through the year. It could be about, economic slowdown has meant that our education company isn't employing or isn't educating the number of people that it should be because everyone's in lockdown and at home. Now that's an understandable reason, but for every time there is a problem or an issue, it could be a company where we think a company is producing renewable energy or materials to go into renewable energy, but there are questions about how sustainable the supply chain is for that wind turbine or for that electric vehicle. So we flag all of that. We try and tell our clients what we're doing about that, and often that comes through engagement to focus on those issues and improve those performance of those companies.
See, I think that's because the sort of subsequent question of around transparency, which is if you have that list in that way, because the thing with greenwashing is that different people have different views about what is not acceptable, understandably. But if they can look and they can say, okay, well, you're holding this company, this is your rationale, this is what you're measuring, then they can make an informed decision. The problem you've got is where companies don't do that. And I think that's where the issue has arisen, the sense that, well, do you know what, this is going on, it's all fine, don't worry about us. And actually, that's something that people find a little bit more worrying than not.
So our view is that, full transparency of what's in our portfolio is the right level of transparency between us and our clients. But you're right, then it empowers the client or the advisor to make a judgment on what's in our portfolio. Some of the most interesting discussions we've had with sort of ethical focused advisors is their focus on saying, we believe that the high level portfolio objectives and sort of engagement strategy are all great, but actually it comes down to what's in the portfolio. And if the portfolio top 10 is all sustainable, but the remainder of the fund is, full of, non-sustainable companies or companies that don't clearly support that fund objective, then that's exactly that's the wrong outcome. So we believe that transparency is important, but it also empowers our customer or advisor to make the decision on what they want to be achieving in their portfolio. We need to help them through setting out what the fund's objectives are and then providing transparency. But then it's ultimately the client's call. And I think we need to also be very clear on what the differentiation or differentiating characteristics are between, for example, a ESG integration fund or a fund that is pushing stewardship to drive change, or a company that's investing in fees, or an impact fund which is really aiming as part of its dual objective to deliver sustainability outcomes in the real world as well as financial returns for our customers. So I think we can help, and the regulation is pushing towards this as well, by the way. We can help explain to clients what are the different types of ESG strategy that that we can deliver to them, and be very clear about what each fund we're producing is delivering on that in that context.
I'm sure you have the other thing as well, which is the most challenging questions come when you discover you've got a client who has got incredible levels of specialist knowledge in an area where, I've got university lecturers or professors, people that I know people within the investment industry are going to study with, and he is their lecturer who's a client of mine who's saying, that's very interesting, Michael, you do know that won't work for this reason. You think, oh, and some of the NGOs that we deal with who say that's an interesting company, you do know about this that they're doing in some African country or something that they've got in their supply chain, and it's like, oh lordy, we'll have that conversation with the manager today. But I think that's a great part about the whole engagement thing. Of clients are really engaged with their money, and I think that they are really bothered more and more because they've made that connection between their money and what it's doing, and so as a consequence, that is helping to drive real change.
It's really, and I think impact investing, sustainable impact investing, is a great way to actually create that connection and engage, much deeper engagement between us and our clients and their money. When you're invested with a sustainability or with an impact mindset, I think you're much more interested because you've got two layers. Of course, you're still interested in the performance, the financial outcome, dividends that your fund might be generating to help you with your retirement or your savings, but you're also connecting with your fund via your fund manager on a completely different level, which is, what is my portfolio doing to help solve real world problems? How is my money contributing to real change in environmental or in social outcomes? How is it contributing to addressing climate change, or the opposite? So that, I think that, and I would say that maybe, but I really think it creates a much deeper connection. And you nicely articulated it, but much deeper connection between our clients and their investments. And then that gives us a great position of responsibility in the middle of that client and their savings to really act on their behalf in a responsible way and in a way that represents their interests. And that, I think, that extra level of responsibility, we're not just managing their money, we're managing some of their ethics and values, and desires for their grandchildren or children. So I think that gives us a real extra level of responsibility, which I think dials up our engagement with the way we manage money, much more than if it's just about financial outcomes on their behalf.
I think there's two things there. It's the first one, which is, I don't think sometimes people quite grasp how clients at the moment, it could be argued, are a little disappointed in their financial performance. I can't imagine why. But when it turns out that actually not just that they've lost money, but that their underlying principles, some of the things they've believed in, campaigned on, etc., for many, many years, have been undermined without them being aware of it.
Yeah,
that matters so much more, and I think that's why I'm really pleased that the regulator has decided, enough's enough. We've got to put a stop to this, because you can't do that. It's just completely just dishonest, basically. And there's so many good stories out there. So share the good stories.
That's right, David. Exactly. So share the good stories. But the greenwashing kind of challenge is to make sure you're not just sharing the good stories and hiding the bad stories. But I agree. I think it's a great way to connect, a great way to create a sort of better dialogue. I think you touched on it a bit earlier, but I think the transparency is crucial. But it's linked to we've got to be prepared for having that just discussion with a university professor who is focusing on, novel chemical innovation, or dealing with sort of interesting renewable outcomes, or a sort of socio-economic and or sociological kind of analysis. We've got to be in a position where we actually understand the underlying issues to the degree that a real specialist in any of the areas that our fund companies, our portfolio companies operate. We've got to be sort of on top of the issues, maybe not quite to the degree that a sort of 50-year professor in a particular thesis is going to be on top of, but we need to be on top of those issues. So that really puts the onus on us to have very, very detailed, deep analysis not just of the business model and the financials, but of the kind of social environmental performance and on the underlying real world sustainability issues that this company is hopefully addressing and solving for. So I think that extra level of analysis backs up the full transparency that we need to deliver to our customers, and I think results in much better investment outcomes over the long term, as well as much better social and environmental outcomes. So it's like, it's a lot of work and it's a lot of analysis that goes behind this, and that obviously links directly to the greenwashing thing. I think if you take a fund approach and said, look, we're a sustainable fund, but you haven't really got behind that, and you haven't really thought, I really want to drive real world positive sustainability outcomes in a really thoughtful, analytical, sort of structured way, I think you then are opening yourself up to risk of greenwashing and or accusations of it. I think if you do it properly, with really deep analysis, really strong intention to do the right thing, and to balance social outcomes and environmental outcomes with investment outcomes, I think you actually do the job much better, and you protect yourself much more effectively against falling into the trap of greenwashing.
And it's more enjoyable.
Yeah, I agree. It's a fascinating job. We absolutely, me and my team, and those of us at M&G and in our broader industry, who work in this area of sustainable or impact investing, are totally, almost without exclusion, in my experience, are really passionate about it, are really believe strongly in it, but also fascinated by it, really motivated by, by the intellectual challenge, as well as some of the positive social environmental outcomes that we can help deliver or we can support. So yeah, it's a fascinating area. I think we're incredibly lucky to work in this area. I absolutely love it. But it's hard work, but it's good. It's hard work, but challenging and good hard work.
But it's one of the things I've always found kind of odd, which is the idea that there are managers out there investing into the least sustainable possible companies for the future. It's like, isn't there an inherent problem there in that you're investing into not a particularly great future? So I'm not sure how that one works, but that's probably a little bit too existential for today's brief 5-minute chat that's lasted for a little bit longer.
Agreed. But look, I agree. I mean, you've hit the nail on the head. I think sustainable investing is about investing in the future world. You've got sometimes called like the future world fund. I mean, I think it is literally that. So, and you're investing in a way that is identifying businesses that are going to be successful in a future world where climate change is real and regulation is going to tax companies on carbon, and hopefully the world is more equal and sort of where we're managing our health challenges better and we're kind of tackling biodiversity. So you're investing in companies that are well positioned in that future world, but you're also investing, which is what we do in our impact approach, in companies that are providing the solutions for those big challenges, whether it's 17 sustainable development goals or any other way you want to focus on the world's big challenges we face. You're investing in companies that are solutions to those challenges. So those companies should actually perform well in a world where we need to tackle climate change, biodiversity loss, inequality, and sort of social exclusion and major health challenges. The companies that are explicitly and intentionally tackling those challenges, we think, will benefit from capital flows, from client demand, and from regulatory support. So I think it's a logical way to invest for the future, as well as you quite rightly put it, it's a logical way to invest in the future, as well as investing kind of in the future world that we want to see.
Yes, it's investing in the future for the future.
Yeah.
There's a strapline for your marketing team.
In the future for the future. Very good. Well, I'm glad it's.
Oh yes, wasted.
We'll make sure we make sure.
That's the one thing Will's written down. That's great. I think that's what's interesting about it, is that having these chats is that enthusiasm. That it's not, you don't just sit at a screen and look at the various ratios and all the financial metrics and all the rest of it. It goes so much further, and reinforcing that. And that's the purpose of this, is so that a client saying this is going to think, that's why M&G this is what the person managing my money, this is, and it makes them feel more connected.
Yeah, good. I mean, I hope that comes across, and it's you know, very much part of our mandate, part of our motivation, and we're very passionate about it. But we're doing this on behalf of our for our clients, and on behalf of our clients. So you know, we need to communicate what we're doing to them in a way that it conveys some of that positivity, but also some of the opportunity. That's one thing that really excites us is the opportunities that we can enable our clients to participate in through sustainable and impact investing.